Question 1. From a practical standpoint, when a business owner, Mr. Taylor, decides to increase the deductible on his commercial property policy in exchange for low premium costs, what risk management method is primarily being used? A. Avoidance. B. Transfer. C. Retention. D. Sharing. Answer. Correct answer, C. Retention. Explanation. Mr. Taylor is choosing to retain more risk by accepting a higher deductible. Retention means that the insured absorbs a portion of the loss, either intentionally by selecting a high deductible or unintentionally due to inadequate coverage. This is different from transfer, shifting the risk to the insurer, avoidance, eliminating exposure, or sharing, pooling risks with others. Retention is often used to reduce premium, and it's a valid risk management method outlined under Principles of Risk Handling, Ref. Missouri Commercial Lines Outline, Risk Management Techniques. Question 2. In light of recent developments, a manufacturing company in Kansas City owned by Ortega suffered damages to business equipment due to a power surge. The policy in place was a commercial property special form. However, the insurer denies coverage. Which clause likely justifies the insurer's position? A. Insuring agreement. B. Exclusions clause. C. Declarations page. D. Conditions section. Answer. Correct answer, B. Exclusions clause. Explanation. The exclusions clause defines what is not covered even if the loss seems sudden or accidental. Power surges are a common exclusion in many policies and less explicitly endorsed, although the special form provides all risk coverage. It still lists exclusions like wear and tear, mechanical breakdown, and power surges. The declarations provide summary data, but not limitations. The conditions outline duties, and the insuring agreement offers broad coverage subject to the exclusions. Ref. ISO Commercial Property Form CP 1030. Special Form. Question 3. When considering the requirements of an enforceable insurance contract, which of the following best represents the element of consideration? A. The agent's license to sell insurance. B. The policyholder's signature on the application. C. The insurer's promise to indemnify and the insured's payment of premium. D. The declarations page listing the policy terms. Answer. Correct answer, C. The insurer's promise to indemnify and the insured's payment of premium. Explanation. Consideration is one of the essential elements of contract, along with offer, acceptance, legal purpose, and competent parties. In insurance, the insured's consideration is the premium payment and application truthfulness, and the insurer's consideration is the promise to indemnify. The declaration and agent's license are necessary components, but not consideration. Ref. Missouri Contract Law for Insurance, Contractual Elements Section. Question 4. Throughout the course of a claims dispute, Mr. Benson disagrees with the insurer's valuation of the damaged stock inventory. Which clause in his commercial property policy allows for a neutral method of dispute resolution? A. Arbitration clause. B. Coinsurance clause. C. Appraisal clause. D. Subrogation clause. Answer. Correct answer, C. Appraisal clause. Explanation. The appraisal clause allows both the insured and insurer to appoint appraisers and have a neutral umpire decide on property value disputes. This is a common clause in commercial property policies and is used when there's disagreement over loss amount, not liability. Arbitration might apply to broader legal disputes. Coinsurance relates to valuation penalties, and subrogation pertains to third-party recovery. Ref. IOCP Euro 10. Building and Personal Property Coverage Form. Question 5. The general consensus is that speculative risks are not insurable. Which of the following best explains why? A. They involve only physical property. B. They involve intentional fraud. C. They involve the potential for both gain and loss. D. They lack the element of insurable interest. Answer. Correct answer, C. They involve the potential for both gain and loss. Explanation. Speculative risks, such as gambling or investing, include the possibility of gain, which is contrary to the principles of insurable risk. Insurers only cover pure risks, situations with the chance of loss only, not profit. This aligns with the principle of indemnity, which ensures the insured is made whole, not better off. Ref. Missouri Insurance Licensing Handbook, Type Section. Question 6. In the context of A warehouse fire in Springfield. The insurer's investigation reveals that the building had been vacant for 7 consecutive days prior to the loss. The policyholder never informed the carrier what provision might reduce or deny coverage. A. Insuring agreement. B. Vacancy provision. C. Exclusions clause. D. Endorsements page. Answer. Correct answer. B. Vacancy provision explanation. Most commercial property policies include a vacancy provision stating that if a property remains vacant for more than 60 consecutive days, certain perils like vandalism or fire may be excluded or paid at a reduced rate, typically 85%. This provision exists to prevent moral hazard and unmanaged risks. Not informing the insurer is hollow. A breach of the conditions section. RAF ASO CP 010 and Missouri Property Coverage Standards. Question 7. Based on the information, is Loon purchases a commercial building and business personal property BBP policy but fails to insure her property to at least 80% of its replacement value. After a loss, the insurer applies a penalty. What principle justifies this? A. Subrogation. B. Coinsurance. C. Deductible. D. Replacement cost. Answer. Correct answer. B. Coinsurance. Explanation. Coinsurance requires policyholders to insure property to a specified percentage of its value, usually 80% or more. If this is not met, the insurer will reduce the claim payout using the coinsurance formula. This promotes full insurance coverage and discourages underinsurance. The deductible is separate out-of-pocket cost, while subrogation and replacement cost relate to payment method. Recovery from third parties. REF IOCP 010 Coinsurance Clause in Missouri Property Insurance Regulations. Question 8. To illustrate this point, Mr. Granger intentionally misrepresented the square footage of his business property to obtain a low premium. Which of the following best describes this action and its potential consequence? A. A warranty that voids the policy automatically. B. A concealment that has no effect if not material. C. A representation that may void the policy if material. D. An endorsement that limits coverage. Answer. Correct answer. C. A representation that may void the policy if material. Explanation. Misrepresentation involves false statements made during the application process. If the misstatement is material, it may void the policy. Missouri law distinguishes between warranties, strict compliance required, and representations, statements made to the best of one's knowledge. Material misrepresentation that affects underwriting or rating decisions can lead to claim denial or rescission. REF Missouri Revised Statutes SS.1007 and 8 Model Unfair Trade Practices Act. Question 9. Across different scenarios, policyholders may be surprised when their policy is non-renewed. Which of the following is true regarding Missouri law on policy non-renewal of commercial property insurance? A. The insurer may non-renew at any time without notice. B. The insurer must provide at least 10 days notice. C. The insurer must provide at least 30 days written notice. D. The policyholder must initiate non-renewal. Answer. Correct answer. C. The insurer must provide at least 30 days written notice. Explanation. Under Missouri law, RMOSS.4, insurers must provide written notice at least 30 days prior to policy expiration for commercial lines non-renewal. Failure to do so can result in mandatory continuation of the policy. The 10-day notice period typically applies only to cancellation due to non-payment. Policyholders are not responsible for initiating non-renewal by the insurer. REF Missouri Department of Insurance Commercial Policy Regulations. Question 10. Given the circumstances, a business experiences a complete shutdown due to a fire and incurs additional expenses to continue operations at a temporary location. Which coverage would best respond? A. Business income coverage only. B. Extra expense coverage only. C. Business income with extra expense. D. Equipment breakdown coverage. Answer. Correct answer. C. Business income with extra expense. Explanation. Business income and extra expense coverage provides reimbursement for lost income due to covered events and for reasonable additional expenses incurred to continue operations like temporary relocation. Business income alone would not cover extra costs, and equipment breakdown applies only to mechanical or electrical failure, not fire. RAF ASO CP 030. Business income with extra expense form. Question 11. From multiple perspectives, the law of large numbers is a foundational principle of insurance. Which of the following best describes how this law benefits commercial insurers? A. It guarantees no individual will experience a loss. B. It allows for accurate prediction of individual losses. C. It enables more accurate prediction of losses across a large group. D. It eliminates the need for underwriting. Answer. Correct answer C. It enables more accurate prediction of losses across a large group. Explanation. The law of large numbers is a statistical principle that says as the number of exposure units increases, the actual results become more predictable. Insurers rely on this to project future claims and set premiums. It doesn't predict individual losses, but helps estimate aggregate losses over pool. Underwriting is still required to assess individual risks. Ref. Missouri Insurance Handbook. Innate Fundamentals of Insurance. Question 12. Examining the consequences of underinsurance, Mr. Hamid insured his warehouse for $500,000 even though its replacement value was $1 million. A covered loss of $300,000 occurred. The policy has an 80% coinsurance clause. What amount will the insurer pay? A. $300,000. B. $150,000. C. $187,500. D. $250,000. Answer. Correct answer C. $187,500. Explanation. Using the coinsurance formula, payout equals amount carried required coverage, X loss equals 500,800,000 X equals 0.625 X equals 187,500 text payout equals left frac text amount carried text required coverage right times text loss left frac 500,000 800,000 right times 300,000 equals 0.625 times 300,000 equals 187,500 payout equals required coverage amount carried X loss equals 800,500,000 X equals 0.625 X equals 187,500 because did not meet the 80% requirement, penalty applies. Coinsurance encourages policyholders to insure to value and penalizes underinsurance. Ref. as OCP Euro 10, the Missouri Property Insurance Training Manual. Question 13. Through the lens of ethical claims handling, is Doyle a claims adjuster delays a payout for an obviously covered commercial loss? Which regulatory framework would this conduct violate? A. Fair Credit Reporting Act. B. Terrorism Risk Insurance Act. C. Unfair Claims Settlement Practices Act. D. Privacy Protection Rule. Answer. Correct answer C. Unfair Claims Settlement Practices Act. Explanation. Delaying payment on a valid claim without justification is a violation of the Unfair Claims Settlement Practices Act adopted by Missouri and many states via NAIC model law. This act prohibits misrepresentation of policy facts, failing to acknowledge claims promptly, and not attempting good faith settlements. The other laws govern credit, terrorism, and privacy. Claim delays, Ref. ROSS.1007 and ACUXPA. Question 14. With the advent of digital record keeping, insurers increasingly rely on third-party consumer reports for underwriting. What law governs the insurer's obligation to notify the applicant when such report is used? A. Graham-Leach-Bliley Act. B. Freedom of Information Act. C. Fair Credit Reporting Act. D. Consumer Data Protection Act. Answer. Correct answer C. Fair Credit Reporting Act. Explanation. The Fair Credit Reporting Act (FCRA) requires insurers to notify applicants if they use consumer reports like credit or background checks in underwriting decisions. Applicants must also be informed if adverse actions, e.g., denial, higher premium, are based on such reports. FCRA ensures transparency and accuracy in data use. Ref. 15 U.S. Code SS 1681, a Missouri licensing outline. Question 15. As demonstrated by Mr. Callahan's case, he filed claim on his commercial general liability policy for customer injury, but the policy had already lapsed. What is the most likely reason his claim will be denied? A. The claim did not include subrogation rights. B. The occurrence took place outside the policy territory. C. The loss occurred after the policy expiration date. D. The declarations page was not signed. Answer. Correct answer: C. The loss occurred after the policy expiration date. Explanation: commercial liability policies are often occurrence-based, meaning the incident must occur during the policy period regardless of when the claim is filed. Since the injury occurred after the policy lapsed, it's outside coverage. The declarations page does not require signature to be binding, and subrogation refers to recovery, not denial. Ref. ICG 01, Commercial Lines Guide. Question 16. While examining endorsements on a commercial property policy, which of the following best describes how an endorsement functions? A. It defines terms used throughout the policy. B. It cancels coverage for certain risks. C. It modifies the standard policy terms. D. It determines the effective date of the policy. Answer. Correct answer: C. It modifies the standard policy terms. Explanation: endorsements are legal amendments to the insurance policy that can add, remove, or alter coverage. They are part of the contract and override conflicting provisions in the main form. They do not define terms, definitions section, or set effective dates. Those are in declarations. Ref. ISO Commercial Property Forms, the Missouri Insurance Contract Guidelines. Question 17. From a historical standpoint, why is adverse selection a major concern for commercial insurers? A. It leads to higher claim frequency among low-risk groups. B. It reduces moral hazard by encouraging full disclosure. C. It increases the likelihood that higher-risk entities buy insurance. D. It encourages policyholders to retain more risk. Answer. Correct answer: C. It increases the likelihood that higher-risk entities buy insurance. Explanation: adverse selection occurs when those most likely to experience a loss are also the most likely to purchase insurance without corresponding premium increases. This can result in higher claim costs and rate imbalances. Insurers use underwriting and risk classifications to counteract this. It's not about risk retention or moral hazard, which are separate issues. Ref. Missouri Insurance Principle to Nate Risk Management Text. Question 18. The primary reason for using subrogation in commercial property claims is to A. Avoid deductibles for the insured. B. Transfer risk back to the insured. C. Allow the insurer to recover costs from a liable third party. D. Create a new insurance policy for the negligent party. Answer. Correct answer: C. Allow the insurer to recover costs from a liable third party. Explanation: subrogation is the legal process where the insurer, after paying a loss, steps into the shoes of the insured to recover damages from a third party that caused the loss. It reinforces indemnity by preventing the insured from collecting twice. It doesn't waive deductibles or create new policies. Ref. ISOCP 010, Missouri Subrogation Law. Question 19. Taking into account Mr. Vasquez's coverage under a business income policy, what key condition must be met before benefits are payable? A. Proof of loss within 180 days. B. A direct physical loss to cover property by a covered peril. C. Natural receipts from business operations must be submitted. D. Notification to the IRS for tax offset. Answer. Correct answer: B. A direct physical loss to cover property by a covered peril. Explanation: business income insurance requires a direct physical loss or damage caused by a covered peril to trigger benefits. This ensures that the loss is tangible and not hypothetical. Filing timelines are important but do not trigger coverage. Tax-related notifications are irrelevant to claim eligibility. Ref. ISOCP 030, in Missouri Commercial Prop Guidelines. Question 20. Contrary to popular belief, an adjuster working on behalf of the insured rather than the insurer is known as A. Staff adjuster, B. Independent adjuster, C. Public adjuster, D. Field underwriter. Answer. Correct answer: C. Public adjuster. Explanation: a public adjuster represents the policyholder, helping them assess and negotiate claims. Staff adjusters are employees of the insurer, and independent adjusters work for the insurer on a contract basis. Field underwriters assess risks for underwriting, not claims. Missouri licenses public adjusters to ensure ethical practice. Ref. Missouri Department of Commerce and Insurance Adjuster Licensing. Question 21. In a modern context of insurable interest, Mr. Ellis purchased a commercial insurance policy for a property he sold 2 months prior, believing that the new owner hadn't yet obtained coverage. A fire damages the property. Which of the following best explains why his claim will likely be denied? A. The insurer is only obligated to pay for replacement cost, not market value. B. There is no insurable interest at the time of loss. C. The claim was reported outside the policy period. D. The loss was caused by a non-covered peril. Answer. Correct answer. B. There is no insurable interest at the time of loss. Explanation. Insurable interest must exist at the time of loss for a valid claim. Since Mr. Ellis no longer owns the property, he does not stand to suffer a direct financial loss. Without a legal or financial interest, coverage is void. This prevents moral hazard and speculative insurance. Ref. Missouri Insurance Law SS.10, a principle of indemnity. Question 22. In response to a client's request, Agent Dyers adds vandalism exclusion to commercial property policy to reduce the premium. What document must be issued to reflect this change? A. Binder. B. Endorsement. C. Conditions page. D. Coinsurance clause. Answer. Correct answer. B. Endorsement. Explanation. An endorsement is a formal amendment to an existing policy that modifies its terms. In this case, excluding vandalism would require a written endorsement signed and added to the policy. A binder provides temporary coverage, and conditions outline duties but do not change coverage. Ref. IOCP 1030, Missouri Insurance Glossary. Question 23. From a practical standpoint, why is the distinction between direct and indirect loss important in commercial property policies? A. Only direct losses are covered under any commercial policy. B. Indirect losses must be covered by separate policies or endorsements. C. Indirect losses include structural collapse and equipment failure. D. Direct losses are limited to personal property only. Answer. Correct answer. B. Indirect losses must be covered by separate policies or endorsements. Explanation. Direct loss is physical damage, e.g. fire to a building, while indirect loss results from the direct loss, e.g. loss of income. Indirect losses require separate coverages like business income or extra expense, often via endorsements. They are not automatically included. Ref. IOCP 030, in Missouri Property Insurance Policy Structure. Question 24. With respect to Mr. Ramaya's manufacturing facility, which has frequent small claims for minor water damage, the underwriter decides to deny policy renewal. Which of the following best supports the insurer's decision? A. The insured violated the coinsurance clause. B. The insurer cannot deny renewal for small claims. C. The insured presents pattern of adverse selection. D. The frequency of losses increases overall underwriting risk. Answer. Correct answer. D. The frequency of losses increases overall underwriting risk. Explanation. Even low severity but high frequency claims affect the insurer's profitability and risk pool stability. Underwriters evaluate both loss severity and frequency to assess future risk. High frequency suggests poor risk management and may justify non-renewal. Missouri law allows non-renewal with proper notice. Rare OSS.4. The Commercial Underwriting Guidelines. Question 25. The fundamental question is, under which situation would a commercial property policy's replacement cost valuation not apply? A. The insured property was not replaced. B. The loss occurred due to fire. C. The replacement cost is less than the actual cash value. D. The coinsurance requirement was met. Answer. Correct answer. A. The insured property was not replaced. Explanation. Replacement cost coverage typically requires the property be repaired or replaced as a condition for full payment. If the insured doesn't replace the property, the insurer pays the actual cash value as CV instead. This prevents unjust enrichment and adheres to the principle of indemnity. Ref. as OCP 010, Replacement Cost Endorsement. Question 26. During the process of reporting a theft loss, a commercial insured provides conflicting dates and values of stolen property, which cause allows the insurer to investigate further and potentially deny the claim. A. Other insurance clause. B. Appraisal clause. C. Misrepresentation and fraud clause. D. Deductible clause. Answer. Correct answer. C. Misrepresentation and fraud clause. Explanation. Most policies contain A misrepresentation or fraud clause, allowing the insurer to void the policy if the insured intentionally conceals or misrepresents material facts. Conflicting loss details may indicate fraud. This clause supports honest disclosure, a legal requirement in contracts. Reforma SSO 1005 RCP 010. Conditions section. Question 27. While it is true that commercial policies offer broad coverage, which of the following perils is typically excluded unless specifically added by endorsement? A. Windstorm. B. Fire. C. Earthquake. D. Smoke. Answer. Correct answer, C. Earthquake. Explanation. Earthquake coverage is generally excluded under standard commercial property forms unless specifically added via endorsement. Fire, smoke, and windstorm are named perils in most basic and broad forms. Earthquake risk requires separate underwriting and rating due to its catastrophic potential. Ref. as OCP 1040 Earthquake endorsement. Question 20. Historically speaking, why are warranties viewed more strictly than representations in insurance contracts? A. Warranties are based on future performance. B. Warranties are always written by the insurer. C. Warranties must be strictly complied with or coverage can be voided. D. Representations are used only during claims adjustment. Answer. Correct answer, C. Warranties must be strictly complied with or coverage can be voided. Explanation. A warranty is a statement or promise that, if untrue or unfulfilled, may void coverage regardless of materiality. A representation must be material to void a policy. Missouri courts apply a stricter standard to warranties to protect insurer risk. Ref. Missouri Insurance Law SS.120 Innate Model Act. Question 29. In comparison with actual cash value, which of the following best defines the key advantage of replacement cost coverage? A. Includes depreciation and taxes. B. It pays the depreciated value of the item. C. It allows for cost savings through copayments. D. It reimburses the insured for the cost to replace property without depreciation. Answer. Correct answer, D. It reimburses the insured for the cost to replace property without depreciation. Explanation. Replacement cost coverage pays the amount necessary to replace the damaged property with new property of like kind and quality without deducting for depreciation. SEV subtracts depreciation, which may result in significant gaps. Missouri insurers often require an endorsement for replacement cost. Ref. as OCP 010 in Missouri Property Insurance Guidelines. Question 30. According to recent studies, many small business owners fail to understand the role of deductibles in property insurance. Which of the following statements is true regarding deductibles? A. They are paid by the insurer before the insured receives payment. B. They apply only to liability claims. C. They are subtracted from the insurer's payout, reducing claim payments. D. They are refunded if the loss exceeds policy limits. Answer. Correct answer, C. They are subtracted from the insurer's payout, reducing claim payments. Explanation. Deductible is the amount the insured must absorb before the insurer pays the remainder. It applies per occurrence unless specified otherwise and helps minimize small claims. It is never refunded and typically does not apply to liability claims unless stated. Ref. as OCP Declarations page in Missouri Commercial Property Form Guide.